G'day everyone, welcome back to Pete's Investing. Today is March 25th, 2023. This is the spot silver price update. Just zooming out on all three timelines for the daily, 4 hourly and the hourly. They're all broken up into an uptrend on the CCI, and the moving average of all those is green, which means they're all in an uptrend. So let's first of all drill down to the daily chart. And just zooming out, you'll notice I've drawn these two diagonal trend lines, and the price is slowly converging in between those two diagonal lines. Also importantly, these two, the support line here and his resistance line, the red and the blue lines, there's support and resistance lines. Now, having said that, there's also a minor resistance being formed on the top of that last trading day, on the top of that wick. That's that dotted red line, so that's a minor resistance. So if that forms in the coming hours after the weekend, and that confirms, we're going to move that solid red line to that level there as a solid resistance line. So where are we going from here? First of all, let me just explain also the retracement level. From that bottom to that high, it's almost reached that 78.6 retracement level. So we may see a bit of a retracement further to the downside before making any potential further advancements. So carefully going long at the moment if you're going to do any trading. Zooming out though, I just want to give you an idea in terms of the CCI 1500, if you're new to the channel, how that behaves compared to the moving average 200 of the price chart. Generally they align. You can see there on that point there, when the CCI breaks above the moving average, that also aligns with the price breaking above the moving average 200. Likewise, when it closes below, that's very close with the CCI and the moving average of the price chart. Although just be mindful, here it closes below in March 2021, and the CCI stays below most of the time, below the moving average. Whereas you'll notice on the moving average of the price chart, the price breaks above the moving average 200. And that may be, to some traders, that may be a signal to buy more. Now, sure, you could have gone long if you're using certain trading strategies, but what this is telling you is be careful, because the price is weakening. And as you can see over time, it did actually weaken. Now, that's taken months, but just be mindful, that's an early signal of weakening, price weakening. Let's zoom into the 4-hour chart. You can see here again the ascending and descending trend lines more closely. Likewise, I've also included here a Fibonacci extension between that low, that high, and that range there. Now the price has reached the just above the 78.6 extension level, and that's where that dotted red line, that minor resistance area, is forming. So again, we may see a bit of a weakness in the coming hours, possibly. Before we'll need to see that confirm. If it breaks to the downside, that'll then confirm that. But if it does break to the downside, I've also drawn this ascending diagonal trend line on that level there. So if it breaks that, that little uptrend is ending. So that's where that needs to be going. Also, you notice if you are trading the 4-hourly time frames, just be mindful as well. Always trade in direction of the higher time frame. So again, if you're trading that area there, make sure the CCI moving average is in an upswing. Same as the daily. Make sure that's in an upswing as well. You can see there that is the same level as that point there. They're both green, so that would have been a nice entry to make. On the hourly charts, you can see that more closely as we've drawn on the 4-hour chart, that diagonal ascending trend line and that dotted minor resistance area forming. So again, if it breaks below that trend line, we're also going to see a weakening of the CCI and moving closer to its moving average. And then that'll, if it breaks through the moving average and that starts turning down as well, then it's a pretty weakening sign. We're going to see potentially more reversal. Now, I'll draw another Fibonacci retracement from that low to that high, and that's that where it's previously was consolidating. Now you'll notice there it's coming level, sitting on the 23% retracement. So the key area we're looking at is if it comes down and breaks below the 50 to 61% level, and it breaks below the moving average on the price chart there, that's probably going to align very closely with the breaking of the moving average on the CCI. So just be mindful of that as we go forward. So if it breaks that diagonal ascending trend line and the Fibonacci retracement breaks to that past that level, then we're going to see further weakening. Also notice in terms of the CCI reliance versus the moving average, on the price chart you'll notice there the price has been going up. And the divergence is a bullish divergence, whereas the CCI is showing a bearish divergence. That's telling you careful about going long, because that's in a downtrend on the CCI, and eventually did break to the downside. So whenever that happens, it usually plays out quite nicely if you're trading divergences. So again, be careful of, be aware of divergence where they occur. That's it for spot gold in terms of where we are. Primarily long positions at the moment, but just be very careful of this minor resistance forming, and if it breaks below this diagonal ascending trend line, be prepared for a retracement. To understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and support the channel if you want to do that support more often. Go to the Patreon page, also in the links below. Thanks, and see you in the next video.